Hi everyone, John Strebler, editor of John Strebler's Investment Outlook, JSIO, a weekly newsletter that comes out every Sunday, looking at what's going on with the stock market, bond market, currencies, but most especially precious metals, where I've specialized since 1974. Coming to you today, as always, from my office, which is jam-packed with things that give me good memories. You can only see some of the hunting stuff, but there's a lot more. Anyhow, today we're going to walk through the latest edition of JSIO, take kind of a deep dive, see what's going on last week, and see the kind of thing you can expect every week. So through the magic of technology, switch over, and there's the latest edition. On the left-hand side, I've got the spot check where I do a quick rundown of what's going on with the stock market. Last week was a really good week for the market. Standard & Poor's 500 was up 5 days out of 5, and my MDI, which is a primary indicator of where the market's going, was up 14 points to a new all-time high. Fixed income rates were down a little, which means bonds were up. Precious metals, not much going on there. Up early, down later, going nowhere. U.S. dollar had a little bit of a rally last week. This week it's rallying even more, incidentally. But on the right-hand side up here, we've got the Dow Jones Industrial Average, and I show that yellow vertical line, horizontal line, and it shows that it's having trouble making a new all-time high. The rest of the indicators have been doing it, but the Dow Industrials cannot get above its highs from earlier this year and late last year. If we take a look at my MDI, market direction indicator, you can see that we have a clearer new all-time high, which is good. The Strebler Inflation Index has been very indecisive for month after month, and we're still kind of stuck there, although lately the trend has been up, it looks like, so, but we'll have to see. And then I walk through all the various indicators that are the most important, I think. On the upper left is the NASDAQ, which has been soaring higher, making new high after new high. On the right is the Dow Jones Transportation Average, which has just been stuck, can't get anything going like the rest of the indexes. Down below that on the left, New York Stock Exchange Advanced Decline Line. It's been the strongest one of them all. It's been going up more than the other ones for quite a little while there. Very bullish. On the right-hand side is the Standard & Poor's 500, and I show a trend line there. It's up 26.4% in only 3.5 months. That's really unsustainable, but market's just been soaring. On the lower left is price of gold, which following a big move up is just kind of walking sideways. I expect that when that gets going again, it'll get going on the upside again. On the right-hand side is a relative strength chart, gold compared to the Standard & Poor's 500. And again, following a big jump in this ratio, we see that it's been walking sideways to lower as the stock market has caught up and gold has just gone sideways. Down below that, on the lower left-hand side is the U.S. dollar index. You can see it's gotten slammed so far this year. On the right-hand side is the yield on 20-year Treasury bonds, and you can see that's been going up for the last year or so. And then finally on the left-hand lower side is the price of oil, which has been pretty doggone weak. So my commentary this last week was about the strength in the stock market, how it's been up so sharply for the most part, but at an unsustainable rate. So far this week, it's continued to go up some more, but we'll have to see. So after that, I point out the fact that summers very often are times when we'll see a lot of indecision in the markets. People are away on vacations and so forth, and so the markets are a little thinner than normal, and so any little thing can tend to move it more one way or another. So summertime, we often see things that aren't real reliable, and so I'm advising readers to not read too much into the things that go on this summer, as they're not as reliable as they normally are. Let's go back and take a look at the newsletter again, if we can do that. Mr. Technology, there we are, yeah. So I talk a little bit about what's going on with the two different ETFs, exchange-traded funds, that allow you to trade and own the gold and silver mining shares. The two ETFs are GDX, which owns the larger, longer established gold and silver mining companies, and then GDXJ, which owns the juniors. The smaller ones, they tend to move more up and down. And so I'm commenting on how what's been happening with the two of those is a little bit bearish for gold. But then again, reminding us that it is the summertime. We don't want to read too much into it. Moving on down here, some ways that you can help spread the word about JSIO by subscribing to the channel, my YouTube channel, by watching the videos, watching the entire video. Even if you don't like it too much, keep it on in the background while you do something else, because that scores me points with YouTube and then draws more viewers to my videos. Give it a like if you don't mind, or a dislike if you don't like it, and share your thoughts. Leave a comment, good, bad, or otherwise. All of those things help YouTube know that they should spread the word on this and get other people to come look at it, and that ultimately helps my newsletter subscriptions, which then keeps this thing coming out every week. And then I go on to talk about AI. Gee whiz, artificial intelligence. Oh my God. Okay, it's a good thing you didn't see my face on that one, but let's go back there. And then a section of the newsletter called Caught My Eye. And I've been using this more and more lately as a way to feature news stories that are going on and talk about them. So the first news that we have is about Japan, and how the Liberal Party that's been dominant for so long got beaten in the most recent election. One more sign that the world is heading to the right, towards nationalism, towards authoritarian leaders. Not necessarily a good thing for the world. The next story is about the Standard & Poor's and NASDAQ hitting record highs, which of course we talk about in the newsletter. Here's the first of several stories about AI. And there's been a lot of talk lately about whether the boom in AI stocks is going to end up like the dot-com boom of the 1990s. And if we have time today, I'm going to take a real close look at that with you. I suspect we won't. If not, we'll get at it next week. But it's a big concern on people's minds. The stock market, especially the tech stocks, has been going so high, so far, so fast, and people are worried that it's created a bubble that eventually is going to end like the one did in 2000, when prices dropped by 80% in the NASDAQ. Following years and years of going sharply higher, they just collapsed. And so we don't want to see that again, but you never know. So we'll take a closer look at it probably next week, like I say. Next story is also about AI. And it's an interesting angle. It mentions how with all of the money going into AI, a lot of that is shifting over into the industrial sector as more buildings are being built to deal with the needs of the AI computers and energy and so on and so forth. So pointing out the good news that AI is now causing growth in areas besides just technology, shifting over into the general economy. So that's a good thing, I would imagine. A big trade agreement announced last week with Japan. It was followed up yesterday with another big trade agreement with Europe. So now the two big ones are out of the way. China, of course, is the other one that we're still wondering about. Speaking of China, here's a story about how hedge funds are getting back into China. They've stayed away from China for a while as China was experiencing deflation and a recession, but now they're starting to dip their toe back in there again. And then another story about AI. And the President of the United States, Donald Trump, wants the United States to win the AI race. He feels, like a lot of people, whoever wins that race is going to be the big winner in the long run, economy-wise in the world. His idea for doing that includes deregulation, getting rid of a lot of regulations that prevent investors from doing everything that they might like to do with AI. And that's a real interesting angle. There's good news and bad news there. You get rid of regulations, business can be more efficient, but it creates social and environmental problems. And just today, the Trump administration has proposed stripping away the legal basis for the EPA declaring that climate change is a problem. And the point there is that Trump has been very opposed to any environmental protections because he wants to just drill, baby, drill. And, okay, I'm babbling. We're going to leave that alone. Anyway, so deregulation, that's a theme with the Trump administration. Getting rid of all the rules, which is wonderful for business, not so great for society and for the environment. And then finally, a story about the Vanguard, a huge investment company, second largest right behind BlackRock. They now are telling people, and they're investing their own money more and more outside of the U.S. rather than in U.S. stocks. We've been doing that here at JSIO for since before this year, emphasizing non-U.S. stocks. So there we go. And I think we end up with, there's a recommendation for stock allocations. This has been a long enough video. We're going to leave it for now. We're going to come back next week and take a closer look at the bubble from the .com back in the 90s and compare it with the bubble that's going on today and try to figure out if we're headed for the same kind of disaster. But meanwhile, I'll come back one more time, say farewell, and remind you to click like on here or dislike, put in a comment or two, and if you're not receiving this newsletter currently, send me an email, jstrebler52@gmail.com, and tell me that you'd like to get 4 weeks of the publication for free. We'll do it. See you next week. Okay, bye.